I think we got to start right here. Joe, I'm going to turn to you. Is this just profit taking in your mind? I mean, is that all that's really going on? Because we were hoping for a Santa Claus rally. We've never missed it 3 years in a row. We did miss it the last 2 years. I think a lot of people were very bullish on these last days of the year.
Yeah, I think it is profit taking. I think that's accurate. I also think what's going on in the precious metals market is a little bit of a reminder how you need to think about risk and how you're going to be treating the management of risk as you move into 2026. I don't think the environment of 2026 is going to be very similar to what we've seen here in 2025, which for the majority of the year, excluding the period surrounding Liberation Day in April, it's been a pretty calm environment, an environment where if you find a trend, you could attach your positioning to the trend and you could ride the trend. I think it's going to be a little bit more difficult, a little bit of fits and starts, more of a rental market more than an ownership market in 26. And I think that's what's being reflected today. And certainly what we're seeing with the volatility and significant parabolic move and reversal in precious metals, in particular for silver, I think that's indicative of the environment.
Bryn, coming over to you. How are you viewing with the action that we're seeing today? I want to ask you the same question. Do you just think it's profit taking? Is this a sign of anything else going into 2026? We just heard Joe say it's more of a rental market than an ownership market.
I mean, we've had a great year, right? The Qs are up, 20, 21, the S&P's high teens return. So whatever happens over the next 2 days, I don't think portends to what happens next year. Sure, today could be profit taking. I do think next year, though, to me, the big setup where we could have, again, a bunch of volatility is really around the Supreme Court decision around the IEEPA and the Trump tariffs. If that goes against the White House, that would be incredibly chaotic to undo. And so I think that event, whenever that clears, could potentially be a nothing burger if they side with him, or to me, an event that really creates some volatility. I do think, though, 2026, we will have volatility like we had most years, but I don't think we're going to have a benign market that just goes straight and up to the right.
All right. She's mentioning it. Jim, I want to come over to you. Just the idea of the tariffs might be overturned. Some other hurdles coming up next year with the Fed and a couple other things. We had Jeremy Siegel on our air earlier today. He mentioned some of those things. He was actually very bullish about the 493 as opposed to the Mag 7, seeing those as really the drivers for the action in the new year. Do you agree with that thesis that, assuming that those things get unwound in a benign way, whichever way that is, whether it's struck down, held up, whichever way the market sees it, it's really the 493 that are the drivers next year?
So before I answer that question, allow me to just set the context because I think this matters. I find it hard to believe in any way that there will be a recession in the next 12 months. And absent a recession or a meaningful scare of one, it's hard for me to believe that we will have anything other than a positive return as measured from December 31st of 2025 to December 31st of 2026. However, within those 12 months, I do think there will be a lot of volatility. I think it will be, to Bryn's point, I think the top of the list as far as reasons for volatility is the IEEPA potentially, most likely being overturned by the Supreme Court. Now, the president will find other ways to institute tariffs, and we'll get through that, but it will create a ruckus. There is likely to be geopolitical issues going on. We've got very high earnings expectations, and even if they're disappointed a little bit, they still will be great earnings growth. Remember, Frank, we're projecting 15% year-over-year earnings growth next year for the S&P 500 as a whole. What if it comes in 14%? Well, for a market that's trading at roughly 22 times next year's earnings, that's going to matter. Now, I put this all together. Where did I start? We're not going to have a recession. We will have a positive year next year, but there will be volatility. And to me, now I'm going to answer your question. Thank you for giving me the runway. I do think the opportunity to hedge most of that volatility comes in looking at the other 493 stocks or the other sectors outside of technology. Not that technology is going to do bad, but that's just probably, given prices, where the most volatility is going to be. So we do favor the equal weight S&P 500 as a tactical trade here. And I do think financials, industrials, materials, energy, and healthcare are sectors to look for in 2026.
Jeff, you had a lot to say. We went to you last year. You did not disappoint. You were definitely
We're
wound
only
up.
5 minutes in it, into the show.
Well, nobody's counting. I'm just saying you had a lot to say. I'm giving you some credit. What you're saying really echoes some of the things I heard from Lauren Goodwin from New York Life. She was saying there's a new regime set up, more volatility, geopolitics having a bigger influence. She also believes that we're going to see more inflation next year. And she's saying something similar to you. That
I don't believe, by the way.
Which part?
I think inflation is more than a little bit of a canard. I think, look, the jury's out.
Well, then
we don't know the
She
verdict.
said more inflation.
Well, no. I mean, the question is whether you have a price adjustment, which is what the Fed believes, which is what I believe, that tariffs will cause a price adjustment, and then inflation will be a nothing burger for the rest of the year. Could be wrong, by the way. When I say the jury's out, the jury is out. We don't know the verdict. We're going to have to wait and see the data come in. But it doesn't seem to me that this is a strong enough economy to get wage growth. I mean, the labor market's okay, but it's not strong enough to get wage growth. And absent wage growth, I think it's hard to get a real wave of inflation. By the way, productivity will help on inflation.
I want to go back to your original point. You see the SCOTUS striking down the IEEPA tariffs, but then you see the administration putting in new tariffs, and that doesn't create a big negative impact to the market.
It does.
Just the uncertainty.
It does.
And then the market recovers at the end of the year. I mean,
Frank, that's the volatility that I'm talking about. That's exactly the volatility. Now, volatility in the short term.
If that's the thesis. I mean, obviously, we're a couple days away from the start of the new year and probably a ways away from the SCOTUS decision. But what creates the recovery? I know you don't have a crystal ball, but in your mind.
Yeah. So, I mean, hopefully the SCOTUS, the Supreme Court, comes out with this ruling in January. I mean, let's not make us wait. And they've kind of telegraphed it. I mean, I'm not some, soothsayer for the Supreme Court. They've kind of telegraphed what their decision is going to be. Get out with it, okay? Make the decision about whether there's going to have to be refunds. And then what will happen is trade policy uncertainty will shoot up again. Hiring will freeze again. Companies are not going to know whether they're supposed to have manufacturing plants in Mexico, Thailand, or the U.S. But in the weeks to come, then the administration, Secretary Bessent, President Trump, will institute other tariffs using other statutes that have much stronger legal standing, and that trade policy uncertainty, Frank, will come down. So what we're looking at is a first quarter that could be kind of choppy. Hey, look, I do think, by the way, earnings are going to be okay, but to my point that I made hand in glove with this is, what if they come in up 14% instead of 15%? That will cause some volatility on top of what we're talking about. So let me be clear. It's not like there is some fatal flaw in the economy or the markets, but volatility should raise its head.
All right, Joe, I want to come in. You reacted to a few things. I wasn't sure which one.
I'm trying to read his face.
He gave me the eyes, Brent. I wish you were here. You could see the look that he shot me. I'm not sure which part of it you were reacting to. I wasn't looking at him while I was talking, but now that I'm looking at him, I'm going to dare to say he disagrees.
No, it's not that I disagree. I always look at it from the lens of positioning and sentiment, because I think that's what matters. It's most important. I think here in the fourth quarter, the market is sending a very subtle message to investors in the trading community in the way that when you look at the various 11 sectors, you're seeing performance. Healthcare with dramatic outperformance relative to the other major sectors. You're seeing some areas of the market where there was very strong strength, like the AI trade, which is now pulling back on some of that strength and working off some of the positioning. So I think the market is accurately getting in front of what Jimmy's highlighting, in anticipation of elevated volatility, the anticipation, as you said, of several events that are in front of us. We have to fund the government by the end of January. That's obviously going to be a concern as well. So there's things that the market is getting in front of. And I think how you treat that is kind of going back to what Bryn said. It actually works in your favor because you've got a more healthier suite of opportunities. You just have to be very, very judicious in mining for those opportunities and understand when risk turns against you quickly, you have to move to the sidelines. And I think that's really the message here in the fourth quarter. If you think about what we saw in various names like AppLovin, like Palantir, when they reversed, you have to be quick to the move to the sidelines. Oracle is another great example of it. So you turn the calendar to 25, you could find opportunities in financials. You could certainly find opportunities in healthcare. I've got my eye on Merck, which is breaking out significantly. I already own the XBI and McKesson. Energy right now is coming back very strongly. I think Exxon is close to a 52-week high. You could look for opportunities at Exxon. So it's healthier, but just because it's healthier doesn't mean it's not going to be a little bit more difficult, because I think it is.